What if we looked at the largest IPO offerings in venture over the last 10 years and see how they've done on the public market? And let's limit it to companies that were founded 15 years or less ago, but let's pull a sample of those. So that's what we did. So I dove into Crunchbase and I pulled out the data set that they were showing, and then I did some of my own analysis on it. And it kind of blew me away. You know, and maybe if we can make this a little larger for folks who may be at home, and we'll look at the top half first. There we go. So take a look at this. So you go up, the recent ones are at the top, and the oldest ones are at the bottom. You can see the dates there and the list of companies. So again, if you're listening to the Biz Doc podcast, while you are on the treadmill later or driving home, I'll describe what's here so you can follow along too. So we take a look at Rivian. Rivian, that was just IPO November of 2021. We've all seen the Rivian trucks, good looking electric truck, EV. When they went out, it was $66 billion, $66.5 billion was their valuation when they went out. Now I'm counting SPACs, direct listings, and IPOs because all of it means going public. So, largest offerings of venture-backed companies in the past 10 years, as long as they were founded less than 15 years ago. So 5 years venture stage, then they went public. So we go to the recent one, Rivian, November 21. They went out at $66 billion. Today, it's trading at $12 billion, a loss of $54 billion in value. That's on the public. That's on the public. Retail investors and institutions are holding that loss. And some people in there may have made a couple bucks during like an uptick. But for the majority, there has been a net loss. Somebody lost the dollars, and there's 53 billion of them that were lost from the IPO date. Toast, September of 21. Now I like Toast. I did a case study on it. And this is the Square, Square, the fintech company originally founded as Square. Well, this is basically Square for restaurants. That's what Toast is. It's a wireless systems, wireless ordering, wireless handsets for all your servers. And they went out at 20 million and they're only trading at 9.76. Now a loss of, 10 billion, 20 billion, trading at 9.76 billion, a loss of 10 billion. And that was September 21. Now let's go look at something much older. How about Snapchat? Boy, what a ride that was a year ago, crashing down. But they're hoping that TikTok gets banned, so maybe they pop up. But their IPO, March of 2017, $33 billion. Today, trading at less than $13 billion, a loss of $20 billion. And then you have this one, probably the best. Pinterest goes out in April of 2019, $12.66 billion. Today, it's at $14.33 billion. And you would say, wait a minute, isn't that an uptick of 1.7 billion? It is until I tell you the following about the IPO. The IPO price is not what the retail investor gets. The retail investor gets the first traded price. And frequently companies go out for IPO and they'll say, it went out for IPO for today, but immediately upon first trade, it rocketed to 24 and it doubled. Get it? Well, we have the BFDT, which stands for below first day trading. So Pinterest is actually exactly $1 billion below first day trading. So it's trading a little bit above its IPO price, but the IPO price isn't what you and me and everybody else saw. When it hit the market out there, it went boom, pop, and it's actually $1 billion under the price that you, me, and the retail investors were able to buy that day. I'll give you another one that's very interesting in that way. Snowflake. Snowflake, you got data storage in the database company. September 2020 goes out at $33 billion. Today, the market cap is 50. Hang on. This company, when it went out on its first day, Rob, don't know if you remember this, they halted trading for volatility reasons on Snowflake's first day. And if you could go find that article, we'll pop that up to show the headline to people, going back September 2020. Because first day trading was $70 billion. The market cap, when it went out for you and me, was $70 billion. And the first day trading from when it went public, where all the venture capitalists and everybody held the shares at that price, it rocketed and it did a gap jump. The first second that went out there, and it was so volatile. I think the price was around 247, 245 on first day for Snowflake. They halted the trading because they were worried about the excessive volatility the first day it went out, and it actually destabilized itself. But nonetheless, the IPO was 33. It may be trading at 50 now, but it was $70 billion value versus 50 now, which means that's a difference of $20 billion. So that first day when it went out, it had a total value of $70 billion. Today it's trading at $50 billion of valuation, a loss of 20. So I also told you the joke of IPOs. IPOs go out and everybody else gets taken care of, but new institutions, brand new, buying in on first day, and retail investors, they get screwed. Everybody running for the shiny object. Another one was Airbnb, December 2020. Goes out at $47 billion valuation IPO. Recent market cap is 75. However, first day trading, at the end of the first day, Airbnb was worth $86 billion. Think about that. Airbnb, IPO price 47, the market takes it at 86. You know what that means? And we'll talk about this another time. The banks blew the pricing on that, and Airbnb was screwed out of billions of dollars in public funds that could have come into the company going public that day. Instead, it finishes first day trading, $86 billion valuation. Today, it's a $75 billion valuation. So the difference between first day trading, when you and I could have bought it, retail investors, and today, $11 billion. The following, I'm going to read down the list really fast now. So as you're sitting there driving, here's your holy cow moment. Rivian, Toast, Robinhood, Bright Help, AppLovin, Coinbase trading $51 billion lower market cap today. Affirm, there's another fintech company. Remember that darling? It was going to redo credit cards and what do they call it? Buy now, pay later. You know, it's down almost $9 billion. Open Door, real estate company. DoorDash, we know them. Airbnb, GoodRx. Remember, we're going to redo the pharmacy industry. We're incredible. It's trading $10 billion down. As a matter of fact, the market cap today for GoodRx is $1.74 billion, which means Tim Cook could write a check for that and still have a couple billion left over in his personal fortune if he wanted to buy a med tech pharmacy company. Uber, Pinterest, Lyft, Snap, all of this, valuation at the IPO, $500 billion, $553 billion. Valuation today, 319, a loss of almost $250 billion, just under $250 billion in market cap loss. So what does this tell you? Don't be so quick to go out and dream about an IPO. Build a great business, because a lot of times you're building a small business for yourself and those businesses are doing great and you are driving. And when you go public, it is a whole other level of headaches. And if you're not ready to take the company public and deliver ever increasing returns, you're going to have this kind of fate. Now, true, we've had some things going on in the market right now, but these gaps are massive, massive. It's not merely, well, let's get back from the COVID pop and let's get back into a regular market. It'll all settle down. Interest rates will go down. That'll help companies that are looking for LIBOR debt, LIBOR, the London Interbank overnight rate, which is what a lot of loans are based on, LIBOR plus X plus Y. When interest rates are up, LIBOR is up, so debt is more expensive. So you go through all these things, all that's going to settle down and stock prices are going to be back up. Really? They're going to be back up if these people have three things: growing revenues, good gross margin, controlled OPEX. That's it. Growing revenues, good gross margin, controlled OPEX. You do all that, you get EBITDA. You do EBITDA well and you manage your taxes well, you get net income. And you get a great PE ratio, which determines the price of your stock. How much profit do you have? Really, price earnings, you know, and multiply by the multiple by your industry, there's your stock price, typically. Some can be overheated or, you know, suppressed, but generally speaking, that's the zone you're gonna live in. And it goes up and to the right if you keep your company going up and to the right. So, really interesting. I couldn't believe that. $250 million in lost value on those market caps. That's a pretty stately list to be on. You would hear that list, Malik, you wouldn't say those are like bum companies, would you?
No, not at all. Especially Rivian and Robinhood, both companies that, you know, I have a Tesla, but I looked at a Rivian previous to that because the reviews on the vehicles were so good. And Robinhood is something that in our downstairs in the production studios for Valuetainment, I would say half of the people trade on Robinhood. So
there you go. Not an endorsement from Valuetainment. However, a fact of life at Valuetainment is Robinhood enjoys a pretty good market share among the people of Valuetainment who keep their eyes on their future and are looking to invest dollars to help make that become a reality. Pretty interesting stuff. And that's, I'm also, you've heard me talk about EV. I have a Fisker Ocean coming. You know, I have one of the Fisker Ocean 1s, one of the launch vehicles. So I'm in the set of serial numbers for the launches, and I'm also a Fisker investor. But as I said last week, I'm not endorsing it. They have to deliver a great car, score well in J.D. Power quality, make sure they can give you good service if you need it, and that the range you get out of the vehicle is what they say, 300 miles for a charge. It better be 300, better not be 250. You know, it better deliver the vehicle they say they're going to deliver with great quality. So I'll say, I'm looking forward to it, looking forward to have one. That's a Biz Doc's own decision. This is not a validation or an endorsement from Valuetainment. But I'm looking forward to it, and I'm excited for it, and I'm excited for the company. But Fisker's stock has also had some challenges since it went out as a SPAC as well. And so you got to be able to put it. So Fisker's got to put points on the board as soon as they start selling cars. Remember, revenue growing, good gross margin, OPEX under control, EBITDA, favorable tax management. There's your net income. Apply it to the PE ratio for your industry, and you should have a stock price that goes up and to the right.